please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
It was a historic day for the market yesterday, with both the indices, the Nifty and the Sensex, at fresh all-time highs. Ahead of the union budget, we caught up with some of the brightest minds, some experts, to help us decode the budget agenda. Here's a slice of that exclusive with Ridham Desai, Nilesh, Shah, Abhay Laijawala, Sajjid Chinoy and Dinesh Kanabar as they lay down the wish list for the finance minister and what they think of the current market rally.
We should not make a mistake of thinking that this is an idiosyncratic bull market. It's driven by SPX and by a host of other markets. Actually, the Nifty was a middling performer last year. So it wasn't like the top-notch market in the world. What was the top-performing index in the world last year was our small-cap index, up 65% in US dollar terms, the #1 performing market index in the whole world, followed by China. But the Nifty was around 35%, so it was in the middle of the pack. So you're right. The budget in the end did not matter because the world was going up and so India went up. You know, I think the budget does play a role because it guides us on what government expenditure will be. The economy, I think, is on a recovery path, so any acceleration in spending will give a further boost. So yeah, I think that's what the market will primarily look at. What is the government's expenditure growth for F19?
World economy, the IMF says, is actually likely to run faster. It scaled up the growth rate for the current year by 0.1 percentage point to 3.7. Next year's growth, FY 2019, by 0.2 to 3.9%. If the global growth is going to keep this pace, then do you think 2018 will be as good a year at the bourses?
So a couple of things. I think to start with, we should understand that, you know, I keep saying 2017 was the year of valor. Big reforms in India, GST, bankruptcy law, bank recap. 2018 has to be a year of consolidation. I think the budget has to send that signal that we have to consolidate the gains that we made last year. Now, this is a delicate balancing act. To be fair, it's a pre-election year. Let's not forget that. There have been various constituencies that were impacted by the reforms of last year, which may require some balm. Agriculture, small, medium enterprises, construction. You will be mindful of that. But what's different this year is, apart from those expenditure pressures, for the first time there's more revenue uncertainty because of the GST. We just don't know how much compliance picks up, whether it takes 2 quarters or 4 quarters or 8 quarters, number two. And number three, the big elephant in the room is oil prices. Nobody's discussing the fact that from June, oil is up 40%. That provided the fiscal authorities a 1% of GDP windfall 3 years ago. Some of that goes away next year. There'll be pressure on cutting excise duties. There'll be subsidies going up at the margin, both food, fertilizer and fuel subsidies. So it's a very delicate balancing.
Nilesh, I wanted to get you in on the point that Ridham was making about spending. Even if we don't meet the fiscal deficit targets this time around, do you think that may not be construed negatively if the government manages to spend more efficiently?
So one, let me just talk about the ways in which government can raise revenue. I think it's important if government maintains fiscal prudence that differentiated India with China, with South Africa, with Brazil. And our government is asset rich. My favorite topic has been bonus stripping. There's no other country in the world where bonus shares are valued at 0. It's only in India where we give this flexibility to rich investors to avoid paying capital gains tax. You plug the loophole, you'll get probably between 15 to 30,000 crore. There are many, many ways in which government can raise revenue without raising taxes, by plugging loopholes, by doing divestment, and that will give them enough money to spend on pre-election spending and yet maintain fiscal deficit target. I think if finance minister uses revenue raising innovatively, he'll be able to achieve trinity of impossible: raise revenue, cut tax rates, spend money, and yet achieve fiscal deficit.
But is there some gains to be made with respect to bonus stripping getting taxed at the time it is stripped, or any other form in which the finance minister can make some money?
Absolutely. And Lata, you and I had this discussion in a different context. I think one of the lowest hanging fruits is the amount of cash which has got deposited on demonetization. And it was Prime Minister's statement, which I totally agree, that this would be scrutinized to ensure that appropriate taxes are collected. And I can say this with a knowledge on the ground that nothing has happened on that. And the numbers that could come out there would be probably far, far excess of any number. So I wouldn't be surprised if the revenues that could be collected on account of cash deposits could exceed actually 1 lakh crores.
There's a lot of talk about taxing the rich farmer and that way, broadening the or widening the tax base or bracket. What's your view on that?
Prima facie, philosophically, it's a great idea, but I think it's all about the timing. Would the government want to go ahead and impose this levy in a pre-election year? In addition, there are sensitivities of farmers also involved. Clearly, this, over the last 3 years, we have seen acute rural distress. And if the government goes ahead and instead of resolving this distress is seen imposing a tax on agriculture, I think politically it would, there would be a very low political threshold for the same.
All right, let's get a quick handle on what's taking place in the Asian markets. The Hang Seng and the Shanghai indices, both of them which gained for 6 consecutive sessions, now have opened. The Hang Seng down about 0.5%, while the Shanghai continues to build up on those 6 session gains, up about 0.25%. The Nikkei down about 0.5%, no problems there, but the SGX Nifty, that one should come up for you. At the start of the show, it indicated a cut of close to 16 points at the open. That one has gone down to about 27 points. Nothing really to worry. We are at record highs. Let's see what happens going forward. But what did not happen well in yesterday's session post-markets was the kind of performance that we saw from liquor giant United Spirits. Reports a shocker in the third quarter earnings. The stock had a volatile day, a wobbly day, so to say. The profits of USL in the third quarter fell 9%. Versus expectations of more than a 54% jump. We have none other than teetotaler Sonal to detail those numbers. Sonal, more green tea than alcohol this quarter?
That's unbiased analysis,
right? Exactly. It's an unbiased analysis, but it looks like a hangover after a long party for these results, The numbers are weak, lower than the estimates. We were estimating good growth in terms of revenue and profits, but not only are they below the estimates, even on a YOY basis, the net sales are down 8%, the EBITDA is down 7%, even the profits came down by around 9%. Now, the company says that it is because of one-time franchising impact, but if we take that also into consideration, their net sales are down around 2%. Now, the only silver lining was that the interest costs have gone down and the company has been trying to reduce their debt and reduce their interest costs. If we talk about volumes have been a big problem for them. In prestige and above segment, the volume declined by 3%, where we were expecting a growth of around 5%. In the popular segment, where they have done the franchising of their popular model, there the volumes fell by 22% and we were expecting a decline of around 12%. So that also didn't do well for them. However, the management still maintains their guidance of double-digit top-line growth and mid-teen margins, but the brokerages are not very bullish on the stock as of now. So expect the stock to be in red today.
It's been quite a sea change after the huge performance Q2, the stock rally. Let's see what happens today, but this definitely is worse off than some of the worst expectations. So no, thanks very much for that. Well, let's talk about some of the important earnings that we are expecting today. Biocon is set to report numbers. What to watch out for? We have Ekta joining in with those details. Good morning, Ekta.
Hi, thanks for that. Well, we already have the Syngene numbers that came out last evening, and that is basically the research and development arm of Biocon, and that too is included in the numbers. The Syngene numbers were actually quite good, with a revenue growth of over around 16% on a year-on-year basis, margins maintained at over 30%. So I expect the numbers to percolate down to Biocon quite positively. But on a consolidated basis, the street is still working with maybe a bit of a sluggish set of numbers, but I wouldn't be surprised if in case there is some positive surprise to the poll that we're working with. So a revenue decline of around 1.6% is what is expected, with margins at around 21% and a profit decline on a year-on-year basis. Now, we are expecting the small molecules business for Biocon to not do that well in terms of a performance this time. time, and remember, it is around 35% of sales. Syngene, I said, was better than expectations, and maybe that would be the positive kicker in terms of the numbers this time round. Branded formulation should be quite steady, which is basically a domestic formulation business. But overall, Biocon hasn't run up because of its numbers. It's run up simply because of its biosimilars opportunity, and that's probably the commentary that the street will be waiting for quite keenly in terms of what exactly we can expect for trastuzumab, especially when it comes to the European markets.
But let's also talk commodities now. Some interesting moves overnight there. We have Manisha Gupta joining in with all the action. Good morning, Manisha. So, tale of two cities. There's crude oil that continues to move higher, but it seems copper is on slightly shaky ground.
It is, yes. The crude oil prices have been rising, and it gained 1.5% overnight, very close to that $70 per barrel mark yet again. And that is on the back of revision of the global growth from IMF and other major banks. You also have very positive statements from the oil producers in sense of supply and demand going forward. And then, of course, there are some oil producers where we have seen supply concerns and the output has been declining quite fast. Add to that, the fact that the US dollar is trading at a 3-year lows yet again is supportive for many of those commodities. But as you rightly said, that really hasn't worked so well for the metals as a space. You have bits and pockets where you have seen gains and losses. So while lead and tin prices have continued to gain up, those are trading at a multi-year highs yet again. But you have seen a decline come in for copper and aluminum. These are a couple of metals where you have seen inventories increase, and you also have seen the markets get a new sense of the inventories that the global LME warehouses are holding.
All right, Manisha, thanks a lot for that. Let's shift back to the equity space, more specifically the futures and options space, as the Nifty is above 11,000. Remember, Surabhi, we were talking about the fact that if the Nifty does go above that 11,000 mark, there is a case for short squeeze and sharp short covering, and that exactly is what took place. The bulls, they wrote every premium as if they were running out of ink, and bears, they just ran for cover as if their tails were on fire, to be very honest. The Nifty put call ratio at 1.89. I don't remember seeing that, at least in my lifetime. I haven't seen the 2003 to 2008 run. India Wix at 16.22 makes it more attractive for writers to really go ahead and make money on the put side. 11,000 put, 33 lakh shares added just 1 day ahead of expiry on the short side. 11,000 call, on the other hand. Take a look at that. We have 29 lakh shares which were unwound yesterday. Mind you, there is still some room to cover for them. 23.5 lakh shares are still open. If you take a look at a couple of stocks, then watch out for the Jet Airways, Jindal Steel and Reliance Communications of the world. They've entered the F&O ban, and we have Balrampur, DLF, Fortis, HCC Just Dial exiting F&O ban. More importantly, we had that NSE circular that came by yesterday post-market, which will increase the premium basis, the increase in the market-wide position limit. So we'll keep an eye out on that.
Okay, well, that's the F&O cues for the day. Let's move on now. Maharashtra Chief Minister Devendra Fadnavis has hinted that the next World Economic Forum Center for Fourth Industrial Revolution is being proposed to be set up right here in Mumbai. CNBC TV18's Shireen Bhan caught up with the Maharashtra CM at the magnetic Maharashtra Pavilion at Davos on the sidelines of the WEF and discussed how this industry's 4.0 blueprint will pan out.
It's about all areas, but specifically this time the new attraction would be Industries 4.0, because you see the entire world is changing, and data is the new wealth, and Industries 4.0 is changing the way businesses used to work, and I think Maharashtra wants to be leader in that. Okay. So we are also unveiling our fintech policy. And through that, we are also, showcasing Maharashtra as a fintech hub. Okay. So
what about the EV policy?
Yeah, that's also part of Industries 4.0. So because, Maharashtra has always been the entertainment hub as well. And EV, gaming, and everything, I think, is now becoming a reality. So Maharashtra wants to be the first in that.
But on the infrastructure side, sir, because you're a big believer in plugging the infrastructure deficit, how soon can we expect the Navi Mumbai airport to be operational? I think a lot of people here would want to know the answer to that. When can we expect that?
So we have already started the work, and we feel, the concessionaire has promised that the one runway and the terminal building will be operational in December 2019.
December 2019.
December 2019. So already if you go to the New Mumbai area where the work is going on, you'll see a warlike zone there. All the work is happening. We are cutting the hill. We are.
And it's not special effects.
No, not at all. It's absolutely real. So the New Mumbai airport is happening, and it's happening in 2019 December.
All right then, with that it's a wrap on this edition of Power Breakfast. But before we leave you, here is a snippet from a special chat with Bollywood's Shah Rukh Khan.
I've always maintained this, and I think a lot of people, and I'm being very honest about it, I love awards. Like I mentioned even last night, movie stars are meant to be narcissists. And we're supposed to be self-obsessed. When we do a job, a film, or an act, you want to have the biggest award.